Japan historically had a very low interest rate for a long time. How has this impacted the dollar-yen dynamics?
Speaking of dollar yen, for the past few years, actually it displayed some really drastic moves. I think it started after COVID. It was at the start of 2021. At that time, the dollar yen was trading at about 103. And fast forward till I think July, if I'm not mistaken, July last year, it hit about 163.
Wow.
So within just that short span of a few years, the yen depreciated 60% against the US dollar.
Wow.
Imagine you're someone working in Japan, your savings are all in Japanese yen, and just over the few years, you have all your cash assets depreciate by 60%.
It's scary thought, man.
Yeah, so I think this is something really drastic, and the main factor that drives the movement of this currency pair, I think we can't have this discussion without talking about the US dollar. Okay, US dollar was the part of the primary factor behind this move. During that few years, I think for context, I think everybody knows it is the years following the COVID. During COVID-19 pandemic crisis, the US government was easing the monetary policy. They were lowering the cost of borrowing to stimulate the economy. So what we had back then was a lot of liquidity in the market, a lot of free money printed by the government to the consumers. When there's too much money chasing after too few goods, that's where inflation happened. And inflation skyrocketed in the US during the COVID times. And after that, inflation has gotten to a point where it's too high that the US Federal Reserve had to aggressively hike its interest rate to curb this inflation. So rather, the US Federal Reserve, they hiked the interest rate to curb the inflation. It increases the value of the US dollar. So that's first part of the equation. The second part of the equation, at the same time, the Japanese yen. The Bank of Japan, they kept interest rate at negative levels at the same time. Okay, so what happens when you have the US dollar that is offering higher and higher rates of return, higher and higher yields, while you have Japanese yen that is offering zero yields? So a natural behavior of investors as a whole, they would be dumping the Japanese yen to buy into the US dollar denominated assets to enjoy the high yields. High supply of the Japanese yen depreciates the Japanese yen's value, and high demand of the US dollar appreciates the US dollar value. So this interest rate differential is, I would say, is the main driving factor of the rise of the US dollar against the Japanese yen within those years.